So the last thing that I want to work through with you in terms of Learning Unit 2 is on page 66 and 67 of your textbook. Now, this is a section that we normally just touch on in Learning Unit 2 because it's dealt with in more detail in Learning Unit 6. But in terms of accounting equation entries and maybe answering some theory-related questions, it's valuable for you to already start noting the difference between the two stock systems and, well, the fact that we do work with two different stock systems. But I want you to very much view this in relation to something that we are going to deal with in Learning Unit 6. So by the time that we get to Learning Unit 6, I'll probably, and your lecturer will probably refer you back to this section of Learning Unit 2. Okay, so basic summary of where why we deal with stock systems. So up until now, we've spoken quite a lot about inventory, and if you've analyzed transactions in your textbook questions, you would have dealt with inventory quite often. So inventory, again, the things that we buy in a business to sell, so group typically called as stock. Okay, so stock is if you are Pick n Pay, it's anything and everything on your shelves. If you are the surfboard center, like your textbook example uses in Learning Unit 2, your stock should typically be surfboards and maybe other surf related items. Okay, so it's the things that if you are a business of trading, which we typically are in accounting 1, so a business that buys things to sell, the stock is the things that we buy. You can also obviously produce your own inventory. If you are manufacturing furniture, you would be producing your inventory instead of buying it in and selling it off. Okay, so that's kind of the area that we are in at the moment. So in terms of accounting, so nothing changed in terms of what stock is or what inventory, how we classify and understand inventory. But in terms of the accounting system, we do have two different options or methods that we can follow in a business when it comes to the accounting of our stock. Okay, so just take a note. Stock is still stock. Inventory, again, that's just a synonym for the same term. Stock, inventory is still exactly the same thing. Merchandise, whatever you want to call it. But in terms of the record keeping of it, so the accounting, the debits and credits, and the naming conventions more than anything, we have one of two systems we can follow. Okay, and you'll see quite a good summary in your textbook. There's a very, very comprehensive table that summarizes the two stock systems. Shortened version you'll see on the screen in front of you. So the two systems that we can use is we can use either the periodic system or the perpetual system. Okay, the perpetual system is the one that you were introduced to without even realizing it. Okay, so that is the system that we have been functioning in. I like to connect the meaning of the two systems by the name, so perpetual and periodic. Perpetual kind of means ongoing throughout. So what that means is we keep record of our stock levels throughout. Okay, so perpetually, ongoing. Whenever we have a transaction, we record the stock elements related to it. So when we are buying any inventory, and this would be familiar to you, we've always debited the inventory account. Okay, so that perpetual system, still the same, nothing changes. When we sold inventory, you debited cost of sales and you credited inventory. And this would also be known to you by now. Credit inventory because inventory is leaving our store. We are losing some of the asset. Debiting cost of sales because that inventory that we lost became the cost price of our goods, and we have that expense to enable us to sell the goods. So debit cost of goods or cost of sales, as we call it. Okay, and then the last one on your screen, end of period accounting entries. So what do we do over and above this? Nothing. So we've continually, so perpetually, booked in stock by debiting inventory, and we have debited cost of sales and credited inventory when we've sold things. So that's why at the end of a time period, we don't need to calculate anything specifically separately in terms of what is the closing balance of my stock, because I've booked it in throughout. Okay, and that's the perpetual system, and that's the system that you are familiar with and the one that we have been working in. Okay, so over to the periodic system. So the periodic system, again, if you look at the name periodic, it's much more, I want to say, methodological. So maybe once every specific period, we are calculating certain things. Okay, maybe at the end of a period, so for the periodic system, we follow a specific process. It's not ongoing and continual like in the perpetual system. So in the periodic system, when we buy stock, because we'll always buy stock, we debit that, we still debit it like in perpetual, but now we use a specific account name called purchases. So purchases is just used for the purchases of inventory. So we debit an account called purchases. Okay, and then if we sell inventory, you can see there's no accounting entries. Okay, so we do absolutely nothing. So in the periodic system, we don't adjust our stock levels. If you look at the entry in green on perpetual, what we are doing with this debit and credit is we are effectively adjusting the stock levels because we have a sale. So we increase cost of sales, we decrease stock. We don't do anything in the periodic system. So there's absolutely no accounting entries that we made. We still do the sale, by the way. This is nothing, the sales got nothing to do with the stock levels. We still do your debit, bank, and credit sales transaction in both of them. But as far as the stock adjustment goes, in the periodic system, we don't do anything. Because at the end of a period, and this becomes relevant, we'll go and do a physical stock take of all the inventory that is left. And that will assist us to determine the cost price of what we've sold. Okay, a simple equation to illustrate this is if I bought 10 items at the beginning of the year, and at the end of the year I have 3 left. Okay, that's kind of a physical stock count. So counting 3, I've sold 7. Okay, and that is how we determine cost of sales or the cost price of the goods sold in the periodic system. So you can see there's no accounting entries that we make when we sell goods, because at the end of a period, we're going to stand still. Again, end of a periodic, end of a period, we're going to stand still, do a physical stock count to determine the goods sold. Okay. So again, referring you to page 66 and 67 of your textbook, in the periodic system, the system that I've now introduced to you, say both times we debit if we are buying something. Just take note of the classification. Purchases is an expense account. Inventory is an asset. Okay, so in the perpetual system, I typically work with buying assets, selling assets. So classification-wise, I'll use the A column in the accounting equation, classifying inventory as assets. In the periodic system, if I have purchases or any other costs, I'll always debit it, but those classifications are expenses. So when I book them in the accounting equation, they'll sit underneath owner's equity. Okay, and that should be all for what I need you to know at this stage for comparison of inventory systems. There should be some examples in your textbook of questions that you can look at, specifically the accounting equation questions, for you to really practically see the difference when you are booking in transactions related to stock in the 2 different stock systems.